What's up, studs? Kunal here, Bulls on Wall Street. Wild volatility in the markets once again as the election and the subsequent news cycle has turned the market a little bit upside down. And so let's dig into the watch list and also my view of the market indices, the QQQ and the SPY, and see what the heck we're supposed to do next week because, frankly, anything can happen. You know, the betting markets have flipped again. Trump had a 20-point percentage lead in the betting markets, and now Kamala Harris actually has the lead. Now, look, betting markets don't mean anything because it's just bettors, and I don't even know if they're American bettors, right? So that could mean anything, but I think it is something, worthwhile to keep track of because the market's keeping track of it, and so we got to kind of keep that into the back of our heads for a little bit. So let's start digging in because it looked like we were going to be breaking out. It looked like we were about to be breaking out and just a handful of days ago. And then all of a sudden the market flipped and now we're not, right? And now we not only did we have a failed breakup, but we dropped into the 50-day moving average on the QQQs, which is, not a buenos. And then the same thing happened on the SPY. I mean, it's rare to go from breakout to 50-day moving average, in like one fell swoop. But we did, and, particularly Thursday was nasty. Now, Friday, we gapped up, but then we could still see by the candle here, we had a little bit of a roll. And so these are just kind of things to kind of keep mind of as we go. And you can see the QQQs also, right? We gapped up and we kind of ran into some resistance and we rolled over. So these 50-day moving averages are going to be key next week, but do not hold to it like a line in the sand. I use the 50-day moving average as a guide to tell me when the market is essentially bullish or bearish in terms of when I can hold swing trades, when there's going to be an increase of volatility, so on and so forth. But for this week, you cannot use it as some kind of absolute guide because my guess is that when the volatility increases, you will have undercuts above and below all sorts of levels, all right? When you are in a bull market and you are just trending up your MAs and you're in absence of like some big news cycle and the volatility is really low, meaning VIX is at, under 20, and even lower than that, that's ideal. During that phase, you'll have like your moving averages in a lot of support areas. They'll hold true and clean because the volatility is compressed, it's low, and so support tends to hold. When the volatility increases and the VIX gets above 20, you start getting into the mid-20s, high 20s, supports are just areas that end up getting shorted or, you undercut and break back over. Your moving averages will serve a lot less. They'll have a lot less value, as you'll start to just shake around due to the increase in volatility. So I'm looking at these as guideposts, but don't hold tried and true. If you got to stop out because you start breaking under things, you're like, man, I need to go to cash, do it, and then you can always re-ramp. And even if you have to chase it back higher, it's not a big deal. It's like buying insurance, right? You pay car insurance for a goddamn decade, right, before you ever use it, and then, right, one day you need it. And, it'll be something like that. You may have to stop out of your position, and you chase them back up, and you're just paying a little bit of insurance premium just in case, right, that shit hits the fan. We don't know yet, but we do have an increase in volatility, and we do have an increase in some fugazis that have been happening. So, if you look at the VIX here, we're in the mid, 22. We got up to 23. I would anticipate, at some point, maybe in this coming week, we could get into even 25, as this will be probably a contested election. They all have been really since 2020. Everyone in some manner has been contested, and this one will get nasty at some point. No matter who wins, that's just the way the cycles have been of recent. So keep an eye on this 2350. I mean, if the VIX breaks out, I mean, you got to go to cash if you're a swing trader, or add some serious hedges, right? You could do futures contracts to the short side, on some NQs. You could buy puts, all that kind of stuff. I think for people that are trading less than, say, $10 million, the best hedge, like us just regular day traders, is you just go to cash, right? The cash is cash, and you just, that's how you hedge it. Now, let's take a look at the watch list. I think there's a lot of good stuff still happening. Guys, the indexes are the indexes, but there's a serious amount of earnings plays that are still going through. I'm not talking about your regular, apples and shit like that, which is barely, these things are barely moving around, right? But I'm talking about like these kind of mediums, mid caps, small caps. They're really pushing through. If you look at here, like you see these kind of companies like this PRLB that are just really starting to clear out some ranges. They got low floats. They're in that more midi range. I think these are the kind of names we want to play, the CVNA types. So this company had an earnings breakout. I think this is right up our alley of what we want to trade. If you got a weak open on this one tomorrow, I mean, that's a red to green. Same thing on this tile. This is a building materials company. But if you look left here, right, you're just clearing out years and years and years of resistance. That's a weekly chart. This is right up our alley. Like, these are the kind of names that we want to trade. I think both of those are going to give us a little bit of, they're a little bit thin, but they're just trading clean. And they all are doing that, these old earnings plays. Damn, why does this thing keep moving like that? Let me get rid of that. Hold on here. So let's go into, we got MD, another one of these earnings breakouts here. And look at the big trend on this, right? Pop up, pull back into the 9 EMA. If you get a weak open on this, like I'm red to greening this thing. MDGL, get a huge level here that goes back multiple years. It's about 320 and some change. We stopped right on the dot on it on Friday. I think this one we want to keep an eye on. It needs a rest day. It was hot on Friday, but look, it's been up quite a few days in a row. Let it have an inside day, maybe even two. That 9 EMA will catch up really fast. It'll be, somewhere around here, and then you'll break that 320 with gusto. Team had an earnings breakout to 10 million shares in volume. Really nice range on this thing. I think if you're starting to clear out some levels, this I think is another tech stock we want to put on our watch list for a day two. AMSC, this is one of my faves for tomorrow. Big range on this, 16%. Once again, none of these kind of earnings breakouts are going to have the volume that you have in like a NVIDIA or Tesla. That's a good thing. Stocks that are doing 50, 100 million shares of volume are usually notoriously hard to trade, even though we're taught volume, volume, volume. There's a subset of where you almost have too much damn volume, right? This will be a little bit easier to trade, a little bit more linear. You won't have as many algos and stuff in it. A nice breakout. I think this one's got 32, 33 in the cards on it. MBLY is one of my favorite longer swing day trading opportunities. You had an earnings beat on this thing too. Boom, boom, rise after revenue beats estimates, guidance narrowed. Dude, you got all this room to 200-day moving average. You got a big bottoming pattern here, and you're starting to kind of, rip tits on this thing. Let's see if this thing pushes through. Boom, 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 boom. Asan, really like the overall look of this one too. If you look here, you're starting to clear out this range. This is also a bottoming pattern up here. A 1250 breakout. This might be even a little bit of a swing trade if the market can hold up, as it's got a little bit of room on top. TGTX has got a nice breakout here. 6 million shares in volume. Did sick range on this thing too on Friday. It's got enough to just get you going with the liquidity also. Hey, Amazon, that 200 seller is back there. I believe that was Bezos. He had a limit order of, I think, 25 million shares at $200. You could see, you could just see that those shares kind of trickling. He's probably 3/4 of the way done from what I can gather. I would see if another 5 to 8 to 10 million shares exchange at 200. and then start looking, right? Start looking and see if it lifts. RKLB, really nice day on Friday. Let's pretend this wick doesn't exist. And if we do, then we just got ourselves a nice little flag pattern. Like the overall look of it. Twilio. You know, we've been trading this the last couple days. Awesome earnings breakout. Then you had a weak open, red to green. I mean, this has got a sick range break on it. This is my favorite type of stock, right? You know, chart. When you have a $400, $500 large cap name that gets in under 100, you're down 90% off the highs. Then you start to beat on earnings when it's left for dead. That's the type of stock that you want to do. I want to trade these catalyst names because the megas are done, right? They're topped out on a longer term basis for maybe quite some time, right? The only one really holding up is Netflix, you know, and kind of Nvidia, right? So just keep an eye on that. Snapchat had a move on earnings, an inside day, and another inside day, kind of stalling out right at its earnings highs. I think a weak open on this one, a weak in red to green it. The range has been actually pretty good. It was about $1 on 12. That's the way we want to roll with this thing. I think Dell is, as SMCI blows up, Dell is the proxy on the other side that gets the goodies when SMCI goes down in flames, which is kind of what's happening right now. Dude, you got a spot right here. It's been, the range on this has been fantastic. As a day trader too, I mean, you're getting pushes that are $5, $6, $7 all around. I mean, you can't really ask for much more than that. I mean, look at the way it opened and where it goes. I mean, that's about an hour, hour and a half worth of work right there. If you could get a stock that was $8, $9, $10 an hour or two, that's where you want to roll with this thing. We talked about those, AMZN, MBOY, good. I'm staying away. So look, Amazon, I think if you clear 200 in this next week, you're fine. The rest of them just don't look very good. You know, maybe Meta if we test the 50-day moving average, but what's the point, right? Like, none of these are not looking good. The only one that looks good is Netflix, and it's getting sold up. Every time it tests 760s, a seller comes in and just knocks it back down. You know, you could tell, like, it's been even on the hourly, like it just kind of tests up and these sellers are coming in. I think there's just a little bit of shift or maybe a rotation that's been happening as these things take a breather, and this SMCI stuff is not helping either. So guys, let me know if you have any questions. Go Detroit Lions. I love you guys. Peace.